Can a speech cause your mortgage payment to rise? Hey, it's Eric Osnes with Homebridge Financial with my weekly update on the mortgage markets for the week ending April 8th, 2022. Well, can it? Can a speech cause your mortgage payment to rise? You bet. And it just did. We started the week with mortgage rates taking a much anticipated breather from their steady march higher. That is until Tuesday morning when Fed Vice Chair Lael Brainard made a speech and announced that the Fed planned to increase rates and reduce its balance sheet at a much faster pace than previously expected. How did the bond markets react? In short, not good. The bond market hates surprises, especially when that comes from the Fed. Brainard's comments unsettled both the bonds and stocks, pushing rates sharply higher. The following day, we got a little bit of a breather when the minutes from the last Fed meeting in March were released, and it gave us a little bit of additional insight into their plans. But for the week, the damage was done. The market has now built in an expectation of a half a point rate increase in May and up to about $35 billion a month in runoff from the Fed's bulging balance sheet. Uh, this is all putting some pressure on longer term mortgage rates. For the week, we were quite a bit higher. Here's the national average for mortgages for this week. 30-year fixed rate, 4.97%. We're up 0.19 from last week. We dipped even over 5% earlier in the week. It settled down just a little bit. 15-year fixed rates, 4.24%, up 0.11% from last week. FHA and VA, 4.62%, up a quarter of a percent from last week. 30-year fixed rate jumbo, 4.3%, up about 0.15% from last week. And I'm also starting to report adjustable rate mortgages, a 5/1 ARM national average, 4.05, up about 0.14% from last week. So yeah, we're dealing with this. Rates are still marching a little bit higher. Have we reached the peak? Maybe not quite yet, but we're crossing our fingers. Wanted to read a headline I saw here recently. Early signs of cooling housing market seen in some U.S. cities. So here's the question: is that headline from yesterday, or is it from a year ago? The answer is yes, both. The media has been predicting a cooling of our housing market for months, but it just isn't happening. Why? Because even with increasing rates, the demand for housing exceeds the available supply by somewhere between 3 to 4 million homes. As long as we have too many buyers chasing too few homes, prices are going to continue to rise. That said, these higher rates are going to push some buyers out or force them to consider purchasing in less expensive areas. But as it stands, we have an ample supply of buyers willing to take their place. It's going to take years before the supply of homes will catch up with demand, especially in the Northwest, where we just have scarce land available to build new developments, along with supply chain and labor constraints. In the meantime, be ready with your fully underwritten loan and a solid strategy to make yours the winning offer. I'm available to answer questions and help with strategies and plan all that out. Just reach out anytime. You can call me 206-915-ERIC, 206-915-3742. You can email me, eric@ericismybanker.com. Hope this information is helpful. Have a great week. We'll see you next week.